you started to get any patterns. So when you get one on a daily basis, like this took 42 days to form, when you start to see a breakout here, then you're basically, you know that the daily chart's starting to go down. So your focus should be, when you're looking at these smaller time periods, 15 minute, 30 minute or so, you should always try to trade in direction of that main trend. And that's one thing I could give you, one tip I could give you. But I can't find a relationship between the length and the minutes like you were asking. But I can find a relationship between the trends. Definitely you have more success, I think, trading with in the direction of the bigger trend.
Yeah. Okay, thanks, James. There's one question from Maria. If you could just flip back to the previous, I think it was a Euro JPY chart that you had up.
Okay, let me go back to that one.
No, she doesn't understand why it's a reversal. She says the trend is falling and it's a falling wedge. What makes it a reversal? Can you just clarify that for her?
Wait a second here. I had too much data on there. I got to log back in. The thing that Maria, the thing that you have to realize is that you may be thinking about the trend that you're looking at inside the pattern. Let me see if I can find that one right here. Okay, you're seeing this and you're thinking the trend is down. So why is this a reversal? Because it looks like a continuation. But by definition of the trend change, you have to realize the definition of the trend change is it's really, well, this says either a continuation or reversal, but actually what it means is it's a reversal of this initial trend. So the initial trend was up at the start of the pattern, and so when it breaks down at this point, that's a reversal of the initial trend. Obviously inside here, you have to remember that the trend was going up, and then by definition this initial trend is strength of the trend prior to the pattern formation. So the pattern's forming in here, but this is the strength of the trend prior to it. So if that's up, then a breakdown through support means that it's a trend reversal. I hope that answers your question. Okay, so obviously this is making lower tops and lower bottoms, and it looks like it's a downtrend, and the channel's down also. The falling wedge is down also. But the key is here, what is the initial trend? And so this is a reversal of the initial trend. All right, I will answer some questions, and I also have one more bunch of questions here at the end of my presentation here. And true or false, one difference between a channel and a wedge: the channel has parallel support and resistance, the wedge does not. Let's see if we can answer that question. True, 80. Well, that's a good turnout too. Very high score, and that's a very good score. The second question is true or false? The wedge has the characteristics of a channel and a triangle. Good. 100% on that one. And our final true and false is the wedge's support and resistance lines narrow but do not touch or form an apex like a triangle. Good. So it looks like you got a pretty good grasp of the concepts that we're looking at today. I think that what you should realize is that when you're working with the channels, number one, you have to know it's a trending pattern as opposed to triangles, which are non-trending. And that when you're dealing with breakouts in channels, you have to watch the distance from where the move started. Okay, if the market has had a prolonged move down from from a resistance point, then oftentimes the first time through the support, you're going to have a little bit of congestion or maybe a whipsaw. Okay, that's just a normal characteristic. Now, the tighter the support and resistance lines, or the tighter the range, say it like in a wedge, then oftentimes your breakouts are going to be stronger than, say, if you just let me get confused there a second. The tighter the support and resistance, the greater the breakouts than if you had a normal channel which has a wide support and resistance point. So that's real important to look at. And so you want to look at, to me, in conclusion, if you're a trader who wants to trade the breakouts of the channels, then lean towards watching the wedges. And if you are a trader that wants to follow more of the pure type trending action, then you want to follow these trends, these channels more, because you'll get an opportunity to trade support and resistance for a longer period of time. So again, wedges are going to be better for breakouts, but channels are going to be better for trending markets. Okay, I guess that's the easiest way to say it. And watch the relative distance between these two points to give you a clue as to whether this market's going to go through this or if it's going to form a fail here and before leading to the next break. Okay?
Just quickly before we end off,
sure.
I want to ask you, what's your tip of the day?
My
Give
what?
us your tip of the week, in fact.
My tip of the week?
Training tip of the week. Yeah. What's a good place where's some good opportunities opening up for us?
Well, what first?
You on the spot or anything?
No. Well, first of all, I got to know. Right now, at this point, I think that you've got to look for a transition in the marketplace. In other words, we've had this sell-off or this risk-off scenario for almost a week straight, say, in the British pound or the euro, and that these types of prolonged moves down typically end with these reversal patterns. So I think you gotta start thinking counter trend right now. Not bottom pick, but look for counter trend opportunities. I think maybe by the end of the day here, you're going to see a lot of people pulling in some of their profits just because of the weekend. But definitely, my general tip is always to don't blame the system or yourself too much, but actually just remember that trading is all about keeping your losses small, and that big losses are just unforgiving, and they're hard to make up, but big moves just happen. So sometimes you just have to chip away and take advantage of the patterns, and then what happens is one big pattern just happens to just occur. So I don't think a trader can go into a trade thinking this is going to be a big move for me or a big profitable move, but if it does happen, it's great. But the main thing is avoid the big loss. I'm very risk averse, and I always look at my exits first and let the profits, let the winning trades just happen. That's about the best tip I could give you. All right. Well, thank you very much, and thanks for sticking around, and stay with us each week with this webinar series, because they keep getting better. The markets are getting better. There's volatility, and there's plenty to talk about. Definitely, we have patterns. We have our quality indicators to look at. So there's plenty to talk about and learn from each week. We'll be talking about power stats in the upcoming webinars, and that's going to be very important. So thank you very much.